Stop. Today. SpaceX went public. And the bigger it runs in the next few weeks, the more shares get dumped on you. Because SpaceX engineered today's pop to work against you. I know that sounds dramatic. Let me earn it. Somewhere in Manhattan right now, a group of bankers is watching SpaceX trade. Every tick higher. They smile a little wider. Not because they own the stock, because there is a clause in the lockup agreement. They helped write. And the higher the price goes, the sooner that clause triggers. The pop everyone is celebrating today is not a celebration. It is a countdown. Stick with me for 10 minutes. Here is the calendar. Here are the dates. And here is why they matter more than the price on your screen right now. SpaceX is going public at a valuation of about $1.75 trillion. Against last year's revenue of roughly $18.7 billion. That is about $94 of valuation for every single dollar of sales. 94 to 1. For a company that is currently losing money. One of the most respected independent research firms on Wall Street ran its own detailed valuation of SpaceX and concluded the company is worth closer to $780 billion. That is more than half below the price it is going public at. When I say the deal is structured to favor everyone, except the person buying today, that is not a feeling. That is a number. The valuation already assumes the future has arrived. Everything that comes after this is about who profits. If it does not. When a company goes public, only a small slice of its shares actually start trading on day one. In SpaceX's case, that slice is about 5% of the company. The other 95% is still held by the people who got there first. The founders, the employees, the venture firms. Those insiders are not allowed to sell yet. They are contractual locked up. Here is what SpaceX did differently. Instead of one cliff at the end of 180 days, SpaceX built a staggered lockup schedule. 5 separate trenches that unlock at fixed intervals. 2 additional cliffs tied to earnings reports. And 1 performance trigger tied to the share price itself. Here is what the prospectus says. If SpaceX trades 30% above the IPO price for 5 out of any 10 consecutive trading days before the first quarterly earnings report, an additional 10% of insider shares unlock for sale early. The IPO price is $135. 30% above that is $175.50. The threshold is not theoretical. It is a specific number. Any trading day where SpaceX closes at or above $175.50 counts toward the 5 out of 10 requirement. The futures market, where traders have been pricing SpaceX before today, has been sitting at around $155. That is roughly a 15% pop from the IPO price already priced in. The trigger is only about 13% above where the market already expected this stock to be trading. One good week. That is all it takes. The clause turns the day one pop. The thing everyone on financial Twitter is celebrating right now. Into the starting gun for early insider selling. Today, June 12th. Day 0. About 5% of the company is in the float. 95% is locked up. Friday, August 21st, Day 70. The first of 5 staggered trenches. 7% of insider shares become eligible for sale. Thursday, September 10th, Day 90. Second trench. Another 7%. Friday, September 25th, Day 105. Third trench. 7%. Saturday, October 10th, day 120. Fourth trench, 7%. Sunday, October 25th, day 135. Fifth trench, 7%. That is 35% of insider shares. Released across 5 dates between late August and late October. 2 more cliffs tied to earnings reports. First cliff, 2 days after SpaceX reports its first quarterly earnings. An additional 20% of insider shares unlock. Second cliff, 2 days after the Q3 earnings report. Another 28% unlock. Then Wednesday, December 9th, day 180. The standard lockup expiration date. The last 17% of insider supply is free to trade. By mid-December, 6 months from today, every restriction on the staggered schedule has lifted. 6 months. That is the timeline you should be thinking about. Not whatever the stock does in the first hour of trading. Sunday, June 13th, 2027, day 366. When Elon Musk best lockup ends. We will come back to that. Because that date changes the whole picture. When Rivian best lockup expired, the stock dropped about 20% in a single day. After Ford disclosed it would sell its stake. When Uber's lockup expired, the stock hit an all-time low. 40% below the IPO price. When Palantir's lockup expired, the stock fell 13% in a single session. As Peter Thiel and other insiders sold tens of millions of shares. Every one of those dates was printed in the prospectus. From day one, almost nobody buying at the peak was tracking them. The room for things to get rough on expiration day is unusually wide. None of those companies were bad businesses. Most of them are still around. Some have recovered. But the part of the deal that hurt retail investors in every single one of those names, the lockup, is the part that is still ahead of us. In this one, June 13th, 2027, day 366. The day Elon Musk best lockup ends. Musk holds the majority of voting power in SpaceX. In the prospectus, he committed to a 366-day lockup. He cannot sell a single share for a full year. Not at day 70. Not at day 90. Not at the Q2 cliff. Not at the Q3 cliff. Not at the 180-day expiration. Not even if the performance trigger fires. He is locked out of all of it. Every headline you will read tomorrow will call that a positive signal. The founder is not dumping shares on day one. That matters. But here is the part that is not in those headlines. Every other insider, the early employees, the early venture firms, the executives below the very top tier, is on the schedule. Their first chance to sell start somewhere in the next 90 days. By the time Musk's lockup even begins to lift, the rest of the inside will have had a full year of exit windows to cash out into retail demand. The person at the top is protected. The people in the middle get multiple exit doors. Over the next 6 months, the person buying tomorrow on their phone watching the ticker climb is the demand. All those exits are pointed at the first loud option. Chase the hype. Buy today at the pop price, right before the trigger window opens and the staggered trenches start unlocking. The weakest seat in the house. The second loud option. Write off the whole thing forever. On principle. Which throws out a remarkable business. Because the deal structure was unfair on day one. The third path is quieter. And it costs you nothing. but patience. Let the calendar do the work. That hype is trying to rush you past. 6 months from now, every restriction on the staggered schedule will have lifted. The Q2 earnings report will have landed. Real numbers that you can hold the company to. The Q3 earnings report will have landed. The performance trigger window will have closed. One way or the other. The Nasdaq forced buying will have run its course. Here are the dates worth marking on your own calendar. Not for trading. For sanity checking the story as it unfolds. Late August through late October. The staggered trench window. First earnings report, somewhere between mid-July and late September. Second earnings report, somewhere between mid-October and late December. And December 9th, the standard 180-day expiration. By the time that final date passes, the price will reflect 6 months of reality, instead of 1 day of countdown. That is the price worth deciding on. Not the one on your screen right now. The best companies of the last few decades stayed viable for years after their IPOs. You did not need to own them on day one to do extraordinarily well. The market rewards the patient far more reliably than it rewards the early. The thing being sold to you today as a once-in-a-lifetime act now moment is almost always a stock that will still be there next quarter, and the quarter after that, at a price set by reality, instead of by a countdown clock. The single most important thing in this entire video was not the calendar. It was the habit of looking at deal mechanics before looking at headlines. The number on the screen today is loud. The calendar is quiet. The number on the screen fades in a day. The calendar runs for a year. Pick which one you let make your decision. Here is what you will do right now. 1. Hit subscribe, because the algorithm will not show you the next video if you do not. 2. Open the prospectus of any company you are thinking of investing in. Find the lockup dates. 3. Send this video to one person who says, "I will buy SpaceX tomorrow morning." Tell them, look at the calendar first. Because Elon did not know. The bankers knew. Now you know. The calendar does not lie. See you in the next video.